huge financial losses, employee manipulation, job cuts, and weak sales figures. Are Nio in trouble? Well, they might be. Hello everyone and welcome back to the China EV show. And today we're going to be talking about one of my favorite brands, and that is Nio, a promising young startup from China with global ambitions. I think Nio makes incredible products. I've been lucky enough to test drive their ES6, their bestseller, and was extremely impressed by its car and the experience it offers. I have no doubt the world will love its cars. That is to say, if they are around long enough for people to be able to enjoy them. Nio just released its October deliveries, and let's just say the numbers are, okay, let me share them with you. Nio delivered over 16,000 vehicles in October, increasing almost 60% year on year. Sound good? Well, XPeng delivered just over 20,000, Li Auto over 40,000, even Leapmotor delivered over 18,000 vehicles in October. This brings them to just over 125,000 in the year to date, which is an increase of over 36% year on year. A couple of not so amazing sales months is not such a big deal, right? Well, when you get a bit closer, you realize that things at Nio might not be so peachy. Firstly, the brand has been making massive losses since the brand began actually. This includes losses of over 6 billion yuan in the second quarter of this year, more than double the loss during the same period last year. So while it may be delivering some cars, they are burning through some serious cash. And as the brand continues to grow, so do its costs. And that is not sustainable. Previously, senior executives claimed to be very confident of doubling their 2022 sales figure to 250,000 vehicle deliveries in 2023. Well, it was clear quite early on this was never going to happen, and early this year this figure was adjusted to 180,000 vehicles for the year. Now, with just over 125,000 deliveries by the end of October, it's clear they're not even going to make this. It seems that things are not really going according to plan. Let's take a quick look back at Nio's financial issues to give you an idea of some of the problems this brand has faced before. In its early days as a struggling EV startup, Nio had a hard time raising financing. After having burned through cash resources as the brand grew, many believe Nio was on the verge of bankruptcy. However, they were saved for the first time. In 2020, it received an investment of around $1 billion from several state-owned companies in Hefei in Anhui province, China, in exchange for around a quarter stake in the company. It relocated its HQ there as a result, and things seem peachy once again. But this was not the end of Nio's dance with death. Nio needed help once again this year, and in June received over $1 billion in investment from an arm of the Abu Dhabi government in exchange for a combined 7% in the company. What do you think? Do you think these financial struggles are normal for an EV startup in its position? Now, it's clear that Nio is very good at burning through money at a tremendous rate. And now the company is looking for ways to reduce these costs and take some of the pressure off. That is why just 2 weeks ago, the company announced they will be laying off 10% of the entire workforce. 1 in 10 people, that's no small number. To add to this, they have been accused of employee manipulation. This week, one ex-employee blew the whistle on the brand, saying it forced employees to buy its cars if they wanted job security or promotions, and to also act as salespeople and try and push the cars to family and friends. After buying 2 Nios on monthly financial payments, the employee of over 5 years was then let go. This really gives you an idea of how brutal the EV industry is in China and how desperate some brands are to get those sales figures. Also this week, Nio posted an advertisement looking for dealer partners to operate stores in China, hinting that the company will adopt a dealership model in addition to its direct sales model. This again will help reduce some costs and take some of the financial pressure off of the brand. So what is really happening here? The brand is growing, they're selling cars, but still, their losses seem to be growing and growing. Simple, Nio is investing in the future and laying the foundations for its grand plan, instead of becoming profitable right away. This includes releasing a large portfolio, now at 8 vehicles, and the very thing, of course, that sets Nio apart from the rest, which is battery swapping. It is really betting a lot on this tech taking off and being the better solution to rapid charging, with the reduced time now taking just 3 minutes, and it's all fully automated. Nio has over 1,700 battery swapping stations around the world, the majority, of course, being in the China market. And with the number growing each day, money needs to be poured into this to keep the momentum going and build out the network to provide more support for customers. The problem is, as rapid charging becomes more and more commonplace and times are reduced further and further, will the need for battery swapping disappear? At present, with the lack of supercharging infrastructure and tech in cars, battery swapping seems like a good choice. But with more cars released with 800-volt tech and charging times going down, the advantages of battery swapping are becoming less and less. And building its battery swapping stations has taken time and money and will continue to do so. Saying this, however, I think battery swapping is something that Nio has to stick with, as it is one thing which sets them apart from competitors, and a global battery swapping network could be of huge value to customers. Next, we need to talk about the Nio phone. Yes, Nio released a phone earlier this year. Supposedly, the Nio phone is a flagship Android-powered handset that is made to complement your current phone to elevate the experience for Nio users. The CEO, William Li, has said that this phone will not compete with phone makers, but instead provide the best experience to vehicle users. Well, why bother then? Surely an app, which the brand already has, would be enough. On a mediocre and probably overpriced phone is the way to show people that you are more than just a seller of cars. And especially when your survival is at stake, I feel like this is something you could drop in favor of something more essential. For example, employee payroll. What do you think? Is a Nio phone something that can differentiate the brand and improve the experience for users? Or is it just an unnecessary obsession? Let us know in the comments below. Finally, we need to talk about Nio's lineup, which is full of great choices for consumers. But it could definitely stand to be trimmed a little to focus on the more high-selling, high-profit models. Now all the vehicles have been in the market for some time, it is clear which vehicles the brand should focus on. Looking at its sales for October, you can clearly see a drop-off in sales after the top 5 selling models. We have the ES6, its bestseller. We have the Touring in second place, a kind of wagon. We have the EC6, which is a fastback SUV. And then we have the ES8, a larger SUV. And then fifth, we have the ET5, their more affordable sedan. So within this 5, we actually have a nice range and diversity of products for different customer bases. All this being said, what does the future hold for Nio? While they are certainly facing some tough times, I have faith that Nio will make it through. It has a unique approach and excellent products I believe will be loved by the world. I don't think it will show profitability anytime soon, but if it continues to get supports for its goals, it could end up becoming a very important global player. What do you think? Do you think Nio will survive to become a massive brand all over the world, or will it just quietly disappear? Let us know in the comments below. That's it for today, and don't forget to give us a like and a subscribe for more updates from the China EV Show. I've been Toby, and I'll see you next time.